You wake up on March 27th, a Thursday. You grab your phone, open your banking app the way you do every month, and you check if your payment landed. And it's there. CPP OAS. Right on time. But here's the thing, and this is what I need you to hear today. The number in your account is not the final word. There are forces working inside Service Canada and the CRA right now, automated systems running in the background, that are quietly calculating whether part of that money is going to be taken back from you later this year, not next decade. Later this year. My name is Joseph, and this is Canada Pension Guide, the channel where we decode the government's own rules so that you keep every dollar you're entitled to. If you are receiving CPP, OAS, or GIS, or if someone in your family depends on those benefits, today's update is one you cannot afford to miss. Because on July 29, 2026, something changes. And most Canadian seniors have no idea it's coming. I'm going to give you the next few minutes of your life, and in return, I'm going to make sure you walk away from this video with something no financial advisor is going to call you to explain, because frankly, most of them don't even track this. Here is the warning. If you are a senior with any of the following: a RRIF account, a rental property, an investment portfolio, or any income source beyond just your CPP and OAS, then right now, today, the CRA's automated system may be set to reduce your OAS payment without sending you a single letter of advance notice. Not a phone call, not a letter, not a warning, just a smaller number in your account come July. And if you are a GIS recipient, if you receive the Guaranteed Income Supplement, because your income is lower, there is a cliff coming in July that could either increase your benefit or cut it significantly, depending entirely on whether your 2025 tax return was filed correctly and on time. Verified fact: the OAS clawback threshold changes on July 1st, 2026. January to June uses your 2024 income at $90,997. July to December uses your 2025 income at $93,454. Two different thresholds. 1 year. Most seniors apply the same number to both halves, and that is a costly mistake. Stay with me, because in the next few minutes, I'm going to walk you through 5 specific situations that are putting Canadian seniors at risk right now, and then I'm going to show you exactly what to do to protect yourself. Let's go through this step by step. 5 things you need to know about what is changing and what you need to do about it right now. Number 1. Your next CPP and OAS payment arrives March 27th, and here's what's inside it. This is confirmed by Service Canada's official payment calendar. March 27, 2026 is the next scheduled deposit for both CPP and OAS. Now, this is still your Q1 OAS amount, meaning it reflects the quarterly rate that was set in January. For Q1 2026, OAS increased by 0.3%. It is not a big number, but it is real, and it is indexed to inflation. For CPP, the 2026 annual adjustment was 2.0%. That means if you are at the maximum, your CPP retirement pension may be eligible for up to $1,507.65 per month this year. That is the Q1 2026 maximum, confirmed directly from the official Service Canada quarterly statistics table. The key thing to note about March 27th is this: it is the last payment under the Q1 OAS rate. Starting April 28th, Service Canada will apply the Q2 2026 rate, which may increase or hold depending on Statistics Canada's inflation data. Watch for that. Number 2. The OAS clawback has 2 thresholds in 2026, and most seniors only know about one. This is the most important thing I will say in this entire video, so I need you to write this down or screenshot the screen right now. From January to June 2026, the OAS recovery tax, what most people call the clawback, is triggered if your 2024 net world income was above $90,997. For every dollar above that line, the government takes back 15 cents from your OAS. From July to December 2026, that threshold shifts. Now it is based on your 2025 income, and the line moves to $93,454. That sounds like good news, and in some cases it is. If your income stayed roughly the same, you may find yourself slightly below the new threshold. But here is the danger. If you had a high-income event in 2025, a RRIF withdrawal, a property sale, a large capital gain, and your 2025 income jumped above $93,454, then in July, your OAS payment may be reduced automatically. The CRA calculates this from your T1 tax return. They do not ask, they act. Forms that protect you. If your 2025 income was significantly lower than 2024, for example, if you sold a property in 2024 but not in 2025, you may qualify to file a T113 OAS to request that the government reduce how much recovery tax they deduct from your monthly payment right now. Do not wait until July to correct it. File proactively. Number 3. The GIS July Cliff, a benefit that can rise or fall without warning. If you receive the Guaranteed Income Supplement GIS, this is the section of the video specifically for you. Every July, Service Canada recalculates your GIS entitlement based on your prior year's tax return. This year, that means your 2025 tax return, which you will be filing between now and April 30th. If your income went down in 2025, perhaps you worked less, had fewer investments paying out, or a spouse passed away, your GIS may increase in July. That is positive, and it is money you deserve. But if you did not file your 2025 taxes on time, or if your income was reported incorrectly, Service Canada will calculate based on whatever information they have, or they may suspend your GIS entirely. A suspended GIS can mean hundreds of dollars missing from a single monthly payment. For many low-income seniors, that is rent money. File your taxes before April 30th. That is the single most important action a GIS recipient can take between now and July 29th. Before I give you the final 2 traps, I want to hear from you. Drop your province in the comments below and one word: ready or worried. Just your province and one of those 2 words. It tells me exactly who is watching and what you need from me next. I read every single one. Number 4. Non-residents face a hard April 30th deadline or payments stop entirely. If you are a Canadian living outside Canada and you are receiving OAS, this section is critical. Service Canada requires that non-residents submit an old age security return of income using Form T4155 as your reference guide directly to the CRA by April 30th, 2026. This is not a suggestion. If that form is not received, OAS payments stop in July. They do not pause. They stop. If you know a family member living abroad who receives OAS, a parent in the Philippines, a sibling in Portugal, a relative in the United States, please share this video with them today. This deadline applies no matter how long they have been receiving the benefit. It is annual. It is firm. Number 5. Stale banking information is the silent payment killer, and it is more common than you think. Service Canada's payment system is almost entirely automated. When you registered for direct deposit, whether that was last year or 15 years ago, the system locked in your banking details. If you have since changed banks, opened a new account, or closed an old one, and you did not update your My Service Canada account, your payment on March 27th will fail. It may be redirected, delayed, or returned to the government. This is not a rare edge case. It happens every single payment cycle. Service Canada does not call you to verify. The system sends the money, and if it bounces, you have to contact them to chase it down. That process can take weeks. Log into your My Service Canada account today. Confirm your direct deposit details. Confirm your mailing address. Do it now, before March 27th. It takes less than 5 minutes, and it could save you weeks of frustration. Now let me pull this all together into your action plan. This is what I call the Safety Shield, your 4-step protection checklist for March through July 2026. Step 1. Confirm your March 27th payment details. Log into My Service Canada account at canada.ca and verify your banking information is current. Do this before March 27th. Step 2. Pull your T4 OAS slip from February and look at box 22. That number is the recovery tax already being deducted. If it seems too high for what your 2025 income actually was, speak to a tax professional about filing a T1213 OAS form to request a reduction at source. Step 3. File your 2025 tax return before April 30th. This is especially urgent if you receive GIS. Your July benefit is calculated from this return. A late or missing return equals a reduced or suspended GIS. There is no grace period for this. Step 4. If you are a non-resident, ensure your OAS return of income reaches the CRA by April 30th. No exceptions, no extensions without a specific request. Remember, the government does not warn you before reducing your benefits. Service Canada and the CRA operate on automated triggers: your tax return, your income thresholds, your banking details. The only person who can protect your payment is you. And now you have the information to do exactly that. If this video helped you understand something that your bank, your advisor, or even your family didn't explain to you, I want to invite you to become part of the Canada Pension Guide community. Every week, I bring you verified, plain language updates directly from Service Canada, CRA, and the official Government of Canada websites. No speculation, no sensationalism, just the facts translated into language that respects your time and your intelligence. If you have not subscribed yet, please do so now. Hit the bell notification so you never miss an update, because these deadlines do not wait. And if you found value in today's video, share it with one person you know who receives CPP or OAS. One share could mean hundreds of dollars protected for someone you care about. I'm Joseph. Thank you for watching Canada Pension Guide. I will see you in the next one.